Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Sorry for the delay. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. Appreciate you all stopping by the lab. So you understand the TraderLab's a group of like-minded traders that come together to leverage their collective experience. It's pretty much a quid pro quo community. In other words, you put something in, you take something out. And this community is really based on a collaborative effort, and it doesn't matter how long you've been trading, what you do, how you do it. It involves data mining, research, sharing of ideas, and the idea of the community is we're all better together. And if you're a developing trader, it doesn't matter how long you've been trading, what does matter is that you want to be in an interactive community and that you want to move your game forward. The idea of TraderLab is to help you understand the business of trading. Why does the market do what it does? How does it do it? And how might you get in alignment with it with trades that are structured and have a statistical edge? The thing about trading is it's an environment of random rotations and random behaviors. It is not a predictive environment, but it is a statistically based environment. So if we can understand how this business works, we might be able to build sustainability. And as developing traders, most of us don't understand the business. We are kind of entranced by influencers, the only one thing you need, and all that, and whatever, right? And all the, quote, experts out there. Now, who is an expert and who isn't? I'm going to say this. You need to become the expert, and you need to understand your trades and the behavior that they're aligned with. And you also need to know that you actually have a statistical edge, not random behaviors. And I think the big illusion, at least it was for me, is all the winning trades I had over the years and trying to make them better. What it is what I found out in my travels, and I started in 1980, was that just because they were winning trades, and there were a lot of them, didn't mean that it was a winning process. It could actually, you'd still be leaking equity. So you might spend a lot of your time trying to fix it or make it better. Very logical. And you also might spend your time trying to squeeze the risk out of your trades and create more certainty, predicting, so you can be right. How about if you're in an environment where those, quote, rules or expectations are not aligned with the business? Well, then you're potentially never going to get to where you're trying to go, creating sustainability. What you will create is random outcomes that favor the opposite side, if you will, or there's the house in the casinos and there's the gamblers. And if you're gambling, how can you anticipate then that you're going to extract dollars from the house, even though on a random distribution of outcomes, you're going to have winning trades? Isn't this a dilemma for all of us? It was for me. And unfortunately for me, it took a little longer than I wish it did to come to that conclusion. And I tried to overcome that outcome with building trading systems. So I'm just telling you a little bit about me. It's not important. What's important here is about you. And that's why the TraderLab exists. It's about you, not about me. I'm just someone who's been doing this almost 47 years, professionally and otherwise. And that doesn't mean I have the answers for you. It means I have a lot of experience, and I can potentially guide you, as well as the other participants in the TraderLab, to maybe up your game and potentially build sustainability and maybe even a career path. And again, TraderLab is not for everybody. It's really a collective, if you will, an environment of traders for traders. And that's kind of the spirit of the community, and that's why it's so successful. It's a bit different, I think, than what you'll find out there. The process I use, I'm not going to spend time with it today, is something called auction market theory. Simple shopping. You know how to shop? You already understand the basis of trading. The volume profile is a tool we use to measure the perception of value. Now, what is this thing of value? Well, why do we even have a market? It's to figure out what something is worth. So the auction is the process of going what's too high, what's too low, what's fair, just to keep it simple. And we can see that in the distribution of volume. It's like when you go to the store. If a price is too high, there aren't going to be too many buyers at a price that gets too high. If the price is on sale, there will be demand, but less volume because the sellers don't keep it on sale. Sales are temporary, aren't they? So then it comes back to equilibrium or a fair price, and that's your retail price. That's as complicated as this is. Now, where it gets complicated is in time frame, because in certain conditions, let's say the trend is up and the time frame is up and we get long, but what happens if in our trading time frame, even though the higher time frame is up, the longs fail and then we get short? Well, if the higher time frame's up and then the intermediate time frame is up, but we get short, how do you reconcile all of this? That's our conflict, and that's difficult because you've got interactive or moving pieces. So that's something you're going to need to work with to understand. Now, how do you understand the condition of the market in your time frame? Context. So what's the context? Well, maybe in the higher time frame, the context is up. Maybe in the shorter time frame, in the morning, like this morning, the context was up. And maybe now it's changing and the context might be going down. Or maybe not. Maybe now it's rotational. How do you function in these different conditions, and how do you recognize change? This is, I would say, the crux of the matter. And of course, FOMO, fear, that just is a given. So how do you get a better handle on the things that impede us? Trade plan, statistical probabilities, understanding yourself, something none of us understand when it comes to trading. Your fight and flight, your fear, the cortisol in your brain, all the things that are happening chemically in your brain. I'm going to say, I believe anyone who comes to TraderLab and does the work and learn how to trade. I completely believe that because of the successful traders that are in TraderLab and have really done really well. But what is it about trading that is so difficult? It's us. If you don't learn to understand yourself, you're not going to find the key impediment to your potential sustainability. And this may sound like, oh, it's not that important. I know I can do this and da-da-da. If you're not doing it and you're not able to do it and you can't manage your psychological state or your emotions, it's really a function of not understanding yourself. So when you come to TraderLab, it's not about just what is the business of trading. It's not about setups. That's not the hard part. I have 60 PDFs I shared that can give you ideas. And there is no plug and play. There's no specific course. What there is the community. That's the leverage. And these are 60 PDFs. These are actual trades. This is research I was doing with Bookmap developers for what we call add-ons. Some of the, some research, some have been put into current add-ons, some has been, as they say, jettisoned, and they're just screenshots. Now, right away, you're going to go, oh, setups. No, don't bother, because that's not the way this works. If there were setups, you'd all go to that one influencer with the only one thing you need. How many times have you seen that? And how does that turn out? Well, you know the answer. The answer's not here. The answer's in the TraderLab. Let's move forward. I'm going to try to do my best. Oh, one side thing, I am in Costa Rica. I have an unstable environment here, not only power, because I'm at the edge of the jungle, lovely spot. Walk out with a baseball bat in case something comes your way that you don't like. Just kidding. But you do have to be aware. The other thing is I have power instability, internet instability, and this morning, and I also have hardware instability because of all the heat. So I have high heat, hardware instability. If I drop out, hopefully I'll be able to come back. And if you're in YouTube, it might take 5 minutes. So everybody's aware of this. I want you to be aware of it. And apologies if I, as they say, go south of the border. Now, I got a couple other things, or a lot of things I want to try to show you. Let's see if I can get to this. Yeah, here we go. These are screenshots of Investor RT. It's my higher time frame software. Now, this is coming into yesterday. So I want to show you. So this is day before yesterday. This was a downside target day before yesterday, and it was around 72.25. And we actually tested it intraday, and it was a low. We counter-rotated, then we came down, took it out, and then came back in. So we had a tail here, and the retail price for yesterday, or the highest volume, was, it's hard for me to see it, around 6,900, okay? And we had yesterday's high here. But what do we know? Let's talk about what we know. The market was short, so we have buy stops there, buy stops there. We have a retail price. Yellow line is called a naked volume point of control. The point of control is that retail price from the shopping experience. Up here, where we have, this is the all-time high in this contract, the March S&P. This was the highest volume, or the mean. It's not mean, it's the median or high volume, retail. So I can come back and check this. So if this one is too low and we have an outside edge here, then I have the possibility, if, because the market is what? Short, to come up and squeeze. So the following day, yesterday, I can take out this high, that go to this retail price, that high, take out this high, and there's this showing you where I call it fuel, and check this high. Now, part of the thrill of trading is it's all random. The rotations are random, and who knows? Okay, so this predictive idea that we all have and need because we're seeking certainty doesn't exist in this business. So we have to find ways to deal with our fear, our uncertainty, and that's what trade plan is about, and structured trading. Not a guarantee of anything other than the guarantee of risk and the guarantee that if you have edge over time and if you execute it, I can guarantee you that if you have an edge, then the dollars on a random distribution of outcome will flow to you. If you don't have an edge, you're a gambler. If you can't execute, you're a gambler. That I guarantee you also. That's why there's never a guarantee in this business that you'll create or reach sustainability, no matter how hard you try. Okay? But if you do the work and learn about yourself and you're patient, you certainly will have an opportunity in the TraderLab. So this is day before yesterday. This is important. Now let's go a little further. This is yesterday. So what happened? You're going to like this. The ETH is the last auction. The ETH low yesterday was at the retail price of the previous day. And what is it? Shopping. Remember the store. If the price that was fair over here, and this is Friday, okay? And we already checked our outside edge over here, remember, and in the ETH, this is too low. And now I open up here. What is the language of the market? I don't use indicators in the traditional sense. I do use measurement. Different. If this is too low, language of the market. Oh, if it's on sale now, but it was a fair price on Friday, then what? If I open higher and I'm above value, and I already tested this, I'm now can get long for what? Squeeze, 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 and target. Okay? Now, a little more. This is yesterday. So, this became too high. This is an auction.